All right, welcome back to the None of Our Businesses podcast, where we talk about the issues that really matter when it comes to running a successful enterprise. We talk about issues in business from current events and from an accountant's perspective, not just one accountant, but 5 accountants actually. With me, as always, is Charlie Zigman.
Hi, everybody.
Jack DiMatteo.
Welcome.
Mark Pallardy.
Hey.
And Ty Carr. Anyway, we got a good episode this week, actually. Cover some future of small accounting firms. Charlie's going to cover some online sales articles. Jack is going to hit us with the decline of the airline industry after coronavirus is over. Mark is going to give us, and we'll all give our opinion on what we think about Intuit and their product offerings. And then a couple accounting outages, actually from Sage. And Jack's going to talk to us about Merck pulling out of the coronavirus vaccine. And then we get into the clickbait of the week, the GameStop stock price boom and what's going on with that from a business perspective. Anyway, I'll start it off here. All right, our first article today is Voices from the Art of Accounting, the Future of the Small Accounting Firm. And so this is based off of like an address, or I guess kind of a State of the Union address from the AICPA president. And essentially, he covered kind of what the future looks like for small CPA firms. And he had a couple things to say regarding what he thought the future would be outside of tax and audit. And so I'd kind of like to get your guys' opinion on what he thought the future held for these small CPA firms. So he kind of has a bullet point list of about 10 things that an accounting firm can do that will like essentially future-proof or what he sees CPA firms doing in the future. So I'll list them off and then we'll see what you guys think. So review of the monthly or quarterly financial statements with the clients. If this is done once in a great while, it could take an hour or longer. When done on the regular, i.e. a monthly basis, meaningful discussion could be had. That's probably 10 to 15 minutes per client. A partner or owner with 50 business clients would be spending 2 days a month or 10% of their work time interacting with the highest levels of their client. And so this is a formula that you would never lose a client, essentially, is what they're saying. Discuss previous month and year to date results and pay attention to differences from the normal or expected. Discuss trends by looking at the last 12 months of the P&L and balance sheet, and then generated most off-the-shelf small business packages you can do this with. Discuss projected taxes for the current and subsequent years and a payment schedule for them. Always ask the client's plans for future business and their lifestyle or what their future holds toward them. Ask about any plans for new products. Factor in a future cash flow needs and the possible need for additional financing. If there are bank loans, review the covenants to make sure that future plans will not cause a violation. Also make sure there's no current obstacles or they're outside of their covenants in those. Evaluating current borrowing and discuss if there's opportunity to seek better arrangements, i.e. a lower interest rate or better credit line. Review aged accounts receivable schedules to make sure there's not money on the table that hasn't been paid. Ask if there's key employee issues or any general staffing concerns. Discuss employment turnover, retention, recruitment, and training based on the client's circumstances. Determine the client's plan for CapEx spending. Client has salespeople who get a base salary plus commission and benefits. Do a calculation of total cost for each of these people, or the top 3 or 4 if it's a very large company. And then succession planning, talking to them about their passion for the business and if they're exiting. Ask if a client is expanding by buying another company or segment or introducing new products. Let's see. Clients' personal wealth creation, asset accumulation, and future cash flows are always near and dear to their heart. Large the playing field by discussing how others, a buyer, would value the business. This always produces animated discussion with the client. Also uses try this if the value is remaining flat or declining or growing for the business. And then encourage discussion about the excitement the client has for the business and if they're still wanting to work or they're waning. And finally, a little finesse is opening an opportunity for a client to share personal thoughts and even to vent about something going on in their business or life. So my take on this was essentially, I think this is kind of stuck in the old school way of a small accounting firm that offers tax and audit or tax and write-up, and they're kind of add-on, tack-on kind of options that you can, provide to a client. But realistically, what I see kind of like is an ad hoc or a very small portion of what we see, what we've always kind of seen as a future accounting firm in here. And it's kind of a very cursory look. But I'd like to get your guys' take. I don't know, maybe I'm cynical because I'm looking at it that way, but I'd like to know your guys' take on it.
Yeah, one thing I commend the author from the standpoint of a lot of times you hear people say, well, you should offer CFO services, or you should be a CFO to your clients, or you hear CPAs that are in that zone that you described, AJ, that say, I'm a virtual CFO or I provide CFO services. And it's really hard to know what that means. I think it's hard for clients and small businesses to appreciate what a CFO would do. And so what the value proposition on that is. And so I look at this list and it very much resonates with us, right? Because it is a list of the kinds of things that we do when we provide CFO advisory services with our clients. I think what you're getting at, AJ, is we don't necessarily package these one by one. We bring them together comprehensively and sell the entire service together, which I think is works for us in terms of how we do it. I can see potentially packaging them one by one, but I think the thing that I would give them kudos for here is the communication of it, the detailed level of communication. Instead of in this article just saying you should do CFO services, the author is laying out kind of what that actually means and what kind of advisory small businesses, step by step could do. And I relate to that because that's what we have to do when we talk to potential clients, small businesses that don't know what a CFO is or what a CFO would do. We have to basically describe these kinds of things on a element by element basis for them to understand what the value proposition is of what we would be doing. So I do like it from that, although it is a pretty long list that they have there. And surely there's other things to being kind of a CFO advisor that maybe are not encapsulated there. The one critique I would have is the comment or the notion that going over the financials with the client should take 10 to 15 minutes. That's never been the case in my experience. You're going to run into all kinds of questions about how numbers were determined from an accounting perspective. You're going to find out that maybe the bookkeeper or somebody didn't do a number right, and that's going to sidetrack the conversation. And then when you finally get down into talking about something that is kind of advisory and meaningful, you're going to do a lot of education with these clients, aside from just getting into understanding. I mean, a lot of times if it's a mature business or it's a experienced business operator, I should say, I always say, they know in their gut how to operate their business. So what we're actually doing is trying to reconcile their way of thinking to what we see in the financial statements. And in the best cases, they're open to the idea of learning to merge those two things, to integrate their way of thinking and operating with what they can get from the financial statements. But a lot of times that takes some education and convincing. We have to show them what the financial statements can show them and how that relates to what their personal heuristics are for running that business. And we have to kind of make that marriage for them so that they can then gain confidence in that process. And so, yeah, just calling up and discussing trends on the financials, I see it as that bigger process of doing that. And yeah, for sure, it takes more than 10 to 15 minutes. And we do it on a monthly basis. So it's not a matter of, we just don't do it often enough. We do it regularly. And it certainly takes us much longer than that.
Solid list. My only thing would be good luck getting a small business owner to sit still to go through all those things. I think getting them to go through the financial statements would be, and actually understand and listen would be a great start. The one thing I think it does point out, and Ty mentioned, it's a very long list, and this is one of the bugaboos I have with some of these small firms because they get out of their sphere of expertise. And you talked about business valuation about that, and I'm somebody that happens to know a little bit about that, and that's one of those areas where we get into trouble because everybody on the street is a valuation expert. They'll walk in, they'll tell these small business owners, your business is worth X. Your business isn't worth X. Stay in your lane, do the services that you do well. If you're a great tax accountant, then be that for your client. If you have the ability to provide the CFO services, do that. But my bugaboo with some of these small firms is that they get outside their lane and they pretend they're an expert in fields they're not. Another great one is systems. They'll get involved with recommending system updates for some of these clients, and that's just not what they do well, or it's not their strong suit. So, again, I would think I would caution it. It's a great list, but make sure you only apply to the areas where you actually can provide that expertise.
I think that's exactly right. So many people are so eager to try to sell some other service that they're willing to just step into anything they can think to sell you a service on. The only real point I can think to add here is that one of the key questions you always have whenever you're looking at financials with somebody is, are we doing well? And the idea of if we're doing well is not the same thing to everyone. And there's a lot of debate about how to quantify that. And so I think that kind of working with your client to get a list of KPIs, or like Ty said, their intuitions about what's causing the business to do well, or what are the things to watch, is a key thing that was mentioned a little bit in the article, but I think could have maybe been given a little more credence. Because it's just, for some people, revenue growth is what they think means they're doing well. For others, it's profitability. For others, it's the balance sheet. For others, it's a metric that you didn't even think of until the client brought it up. And, until you have those discussions, you just don't know what that is.
Yeah, I think really good points. And like I said, I think the article was probably, directed at those small tax and write-up kind of CPA firms. So I think it is a good list for those guys to do that with in mind, staying in your lane and using what you're practicing, the area that you're an expert in. Do you have another article for us, Charlie?
Yeah, I have an article we can do from Bloomberg called Online Sales Ignite in Corners of the World Late to the Revolution. And so what the article is about is, of course, since the pandemic, we've seen increasing globalization, and that's a trend we've been seeing for obviously many years. But what they're saying is that in third world countries, or in countries that are still sort of developing, that they're finding that they're moving towards e-commerce or online sales more than they had in the past. And they're finding that for example, in Mexico, they said that 5% of retail sales took place online, and that figure has grown to 7.8%. And the article represents that as a 54% increase, because it is, if you look at just the numbers, but it's also a lot smaller if you think of it as just 5% to 7.5%. The other, just to kind of put that into perspective, for in 2020, China had 27% of sales take place online. And so basically the article's kind of saying that while we've seen a lot of globalization, we haven't seen all of, there's a lot more to go. And so I wanted to get your guys' take on, do you think that the online marketplace is evolving still, and that we're going to see a significantly different global market than we have in the past due to, coronavirus, or due to just people's willingness to go online when they didn't used to?
What I found about the article that was really interesting was I didn't know that, I'm from the West here. I just assumed everybody was online and everybody had some kind of online presence, but I forget about, like developing countries, or like you think about, like, I think the article mentioned China there, that there was only like in the teens percentage of people that are doing online commerce sales, which I found surprising because, you think of like Alibaba or any of those other kind of Chinese online retailers where you can buy anything, you name it, you can purchase it. So I guess those are geared at, a developed marketplace, and, there's still opportunity out there. So I think, we've talked about declining businesses and growth businesses on this before. I guess I found it surprising that there's still a growth industry in a certain internet market niches where you could have something localized. I guess, and we have another article coming up that, was kind of surprising to me, where I thought that, the products that we use are available worldwide, when you talk about e-commerce, but they differ from place to place due to regulations, local currency, and then the translation to those. So I think it's really fascinating that there's still opportunity out there for e-commerce in places like that.
Yeah, and I guess I would add that, most of our growth that we see in the world comes from developing countries. And, China is able to sustain its high percentage of growth, at least prior to the coronavirus, with 3+% year over year economic growth, largely because they're getting people who didn't have the capacity to spend money into a class where they can now spend money. And I think as technology grows and it becomes more worldwide, and we see things like Starlink become where we have satellites all over the world and people can get internet, and the democratization of technology, that we're going to see more and more e-commerce, and who knows what it's going to do on a global scale as far as currency values, because if everybody has the capacity to purchase, is producing something in a cheaper country going to look differently in 50 years than it does now. So I think the world is ripe for change, and technology, one of the themes of this podcast is technology seems to lead the way when it comes to that. Technology and porn, gotta add that.
Technology, porn, and coronavirus. Those are our three great motivators. All right, Jack, do you have another article we can talk about?
Thanks, Charlie. Yes, I sure do. This one comes to us via Yahoo Finance from Reuters, and it's talking about the cost of flights to Europe going higher because of the, some of these low-cost airlines or low-fare airlines are being knocked out of the market. But I kind of looked at, it's a long article and it talks about it, but I really kind of think of the airline industry and being a lot more trouble than just the flights to Europe, the expense going up. Because if you look at this, I think whenever we do come out of coronavirus, it's going to be like everything else. I mean, if you look at the restaurants now, they're half full. They're not even hitting diminished capacities. So I think when people are able to fly again, it's not like it's going to go back to the way it was prior to coronavirus. You're going to have a lot of empty seats on a lot of airlines, and they're going to have to charge accordingly to fill those seats. So I think it goes a lot deeper than low cost fares being knocked out. I don't know how many. I think the ones that survive this somehow are going to have to charge some exorbitant rates. And I think with what we've learned with Zoom calls, a lot of companies have learned they're going to say, well, wait a minute, before I stick somebody on a plane and fly them overseas. And, I've worked with a company that did a lot of international business travel. And prior to COVID, if you traveled overseas, usually, because a lot of times because of the approval limits, you would see those expense reports be 10K and higher. And I just think a lot of companies are going to look at it and say, this is crazy. Can I get the same bang for my buck in a 2-hour Zoom call? So I believe it was Peter Lynch, famous investor, used to say he would never touch the airlines because the way he saw it, they were vulnerable to three things: fuel costs being one of them, interest rates, because buying a plane is not like buying a hamburger; it's very expensive. So if the interest rates are high, you're going to have that. And they were heavily unionized, so you always had the threat of labor stoppages. So you add those three factors onto what I think is going to be a very, very tough landscape for airlines. And I would like to know what you guys think, because I would almost make the argument that if it doesn't turn around quickly for the airlines, you're almost going to have to see something like Amtrak, where it becomes a quasi government entity. I just can't see how it's going to survive as a private industry with what they're going to have to charge for airfares to be able to make a profit. What do you guys think?
I'm definitely on your page in terms of the direction. I don't have a good sense of the overall magnitude of the industry or the magnitude of the change for what the industry is going to be. But one of the things I want to highlight about what you're talking about, because what I hear a lot is people talking about, well, as the airlines are going to get a boon and travel is going to get a boon once coronavirus is handled, because there's all this pent up demand of people wanting to go on vacation. And I think what you highlighted there is, that's great, but the reality is most travel is basically business funded travel, right? And so it's not, it's not really, it may in fact be kind of a pent up demand and a boon at some point, relatively speaking, because of vacationers. But if businesses in general have found alternative cost structures to avoid travel, that becomes a long-term hit to the industry, which you kind of laid out very nicely. So I think that's 100% true. I think the other thing that is misleading is anecdotally, looking for empty seats on planes, because the industry is just, they're going to avoid that from happening, right? They're going to contract and they're going to reschedule and they're going to make it so that they just fly fewer planes. So we're always going to feel like we're crowded in the sardine tin can, no matter what the demand is, because that's how they're going to try to squeeze the most money out of each person that they can. But I'd say don't be fooled just because you see a crowd in the small space that you're crammed into in the airport, or your particular airplane is full. That doesn't mean the industry as a whole is doing well. They've just contracted to that size, and so yeah, it looks busy relatively, but not necessarily.
Well, I don't think business travel is going to go away. I think it's just going to contract. I think you're going to see, and I've always said, I don't think there's any substitute for a face-to-face handshake meeting, for a business deal. But what I do think is the lead up to that handshake business deal or that face-to-face meeting is going to be done virtually. So all of those precursor sales trips or those business trips that were setting up that deal, I think are going to happen probably virtually. And then, so what is it? Maybe 10% is left then, from what it was before. And I also see probably, they think that this is going to just be exponential growth the minute that everybody has a coronavirus vaccine. But I don't see that happening either. I think, we're creatures of habit. We've been, conditioned to this Zoom meeting lifestyle over the last year or so. And so it's going to be a slow crawl back. And the industries that you mentioned, restaurants, bars, airlines, travel, Airbnb stuff, are going to be the ones that climb back slowly, I think, after this is done, as opposed to, just an exponential growth the minute everybody's vaccinated.
No, I'm going to second that, AJ, because I think this pent-up demand thing is real, but at the same time, there's going to be a real coronavirus hangover that happens. And, I'm not eager to get into a tin tube with people who are coughing or little babies crying. We are all so used to keeping our 6 feet of distance. The thought of getting on an airplane right now does not sound appealing at all to me. And I think as we slowly get vaccinated, and we realize, oh, great, planes have HEPA filters. Why didn't they have them before? And what kind of disease tubes were we flying in? It's like, I think there are a lot of people who are a little more reticent to do this now. And now that they have other options, I still think face-to-face meetings will happen. But as we move closer to self-driving cars and things that can happen where business can happen while you're on the road with your car driving itself. And, there's other safety issues as well. I think there's still, right before the coronavirus, we were still dealing with the 737 MAX problem, which people are hesitant to know if the planes they're going on with Boeing are even safe. So I think there are bigger fish to fry. And while this article was talking a lot about leisure travel, and certainly there are places you can't go over Zoom and you want to get out and experience the real world, I don't think it's going to happen as fast as everybody pretends it's going to.
Yeah, I'm with you guys. I think you guys have hit the nail on the head. The only extra thing I want to add is that kind of the idea and thinking that there's going to be a backlog of travel kind of implies that there was a static amount to spend and then it built up and now it's ready to be used. But the thing is that income didn't just stay equal for the group, for everyone as a whole during that time. And so I think this hope that we're going to see this resurgence of vacations is just not realistic because of that, because of income.
It's funny. I mean, to circle back, I great point, Charlie. I mean, I think it's twofold. I think corporate America's seeing the benefits of Zoom and the savings on Zoom, and that's going to continue. And I think on the leisure side, it's like everybody said. I mean, you kind of have a poster, which is these bars and restaurants, and they're half full because people. Let's face it, people are scared. Vaccine or no vaccine, people are scared. So I think you're going to hammer on the business side and on the leisure side. But hey, I think we covered that pretty well. Mark, what do you have?
So yeah, I have an article from Accounting Today talking about our good friends at Intuit, makers of QuickBooks, and how Intuit aims to keep innovation accountant focused. So the folks at Intuit have decided that they're going to put a fresh spin on their Pro Advisor product and they're going to innovate with accountants, those of us who are potentially listening to this podcast, in mind. Ted Callahan, the guy who's going to be in charge of this, wants to deepen his relationship globally, developing the features needed to power workflows that best serve clients. A lot of this might sound like marketing speak to you, but I'm here to tell you it absolutely is. As somebody who has to work with the QuickBooks products and work with Intuit on a daily basis, there's a lot to like about QuickBooks and the QuickBooks products, but there's a lot to dislike as well. And I think this focus on spreading itself into different sectors is a way to gather more revenue, but it's not shoring up the base level of productivity that their product needs to have. Now, I may be a little biased. I spent over 3 hours this morning on an Intuit support call trying to solve a problem that was my 10th call on the same issue. So to hear that they're out there working for accountants is a little frustrating to me. I know I have in the past signed up for several years to be a pro advisor. And while it is a great certification to have from a client standpoint, because it sounds like, ooh, you're a pro advisor, that's fantastic. I would say 60% of the training you get at Pro Advisor is how to sell clients on different Intuit products. So Intuit's out there to make money. They're out there to spread themselves far and wide. But I think they need to take care of the base product and get things working properly before they stretch themselves too thin. And maybe it's already a little late. What do you guys think?
I'm with you. I think it's a great product. I think that it is a useful tool for a lot of people, and it's obviously one of the most popular, if not the most popular one. But like you said, it tries to branch into so many other things. And the theme that I've personally found is that it often doesn't do the things that it tries to branch into nearly as well, let alone if it had even finished the first task of providing accounting software. But, it does payment processing, for example, and I can name on one hand 3 companies to 5 companies that do that better and integrates to where there is no real, other than just knowing to look for an alternative, there's really no better reason to use one over the other. And that's just one of probably 4 different features that I can think of that are done better by somebody else. I've also used QuickBooks for years and then switched to other accounting softwares and found that a lot of the things that other accounting softwares add are really refreshing and that I wish I had seen more of in QuickBooks. And so that's kind of opened my, horizons to, because, in the US, it's always the case that people are on QuickBooks. So it sometimes looks like that's your only option, but it's not.
Yeah, I just like to say that I parrot everybody else what they're saying here. And I think if Intuit put as much time and effort into the QuickBooks accounting platform itself and innovated on that, like I can think off the top of my head about half a dozen things I'd like to see implemented in the program. For instance, right off the top of my head, approvals within the system, the ability to be able to send, AP bills with attachments the way that Bill.com does. If they had some kind of function like that within QuickBooks, it would make everybody's life a whole lot easier, and they could even charge me $10 extra a month to use it, and it would be a great thing. And I don't think it would be that difficult to do. You have multiple users, you could set those users up to approve things and have it captured in the accounting system. But instead, what they want you to do is they want you to use their payroll service, which is, by the way, if anybody's wondering, absolutely atrocious. There's about a dozen different other vendors that I can mention that probably do a better job at the payroll system implementation outside of QuickBooks, and then journal entry in, that are much more robust, easy to use, user-friendly, with support that actually answers the phone and gets shit done. Sorry for my French, but it's super aggravating that they offer these kind of half-baked ideas. And the fact that I think that they say they have the accountant in mind is, again, marketing speak, because and let me be clear, QuickBooks is a great product. The QuickBooks accounting software itself is. I don't want to take away from that. I think it's industry leading. It's not like you can't get that kind of accounting platform anywhere else. There's about a half dozen other ones we can name that do an admirable job as well, but it is kind of the industry standard for what we expect out of an accounting platform. That said, the other things that Intuit does are not the shining example or industry leader of what's out there, and payroll being one of them. So I just think, it's kind of like a Cheesecake Factory, right? Nobody goes to Cheesecake Factory because the food's good, because they offer 100 different things. You know what I mean? You go to like a really high-end pizza place because that's all they do is pizza, or you go into a really high-end, Asian restaurant because that's the kind of food that they serve and specialize in. I've never heard anybody say like Denny's is really great, because they offer every kind of food under the sun. You usually find one thing, stick to it, and be really great at it. And unfortunately, QuickBooks is kind of the Cheesecake Factory of offerings right now, with them providing payment support, payroll, timekeeping software, you name it, they have it. And don't forget that they're TurboTax and tax software and all this other garbage that they try to tack on to and try to show that they're adding value, when a lot of it is broken, doesn't work, or is overpriced for what you're getting.
AJ, you've given me so many alley-oops, I've run out of hands to do the slam dunks on them. Just this morning at a BNI group, we were talking, I said, does anybody even eat at a Denny's anymore? When was the last time you ever went to a Denny's? But it's funny, and I'm working with working with the local payroll company. It's the same thing. All these accounting firms that get stuck doing payroll by osmosis because they don't want to turn their clients away. But let's face it, small accounting firms don't do payroll well. Let a payroll company do it. Carve that out. They don't like it anyways. It's a low margin business. And it dovetails onto the accounting firm theme that we had earlier. I don't have any problem with people trying to expand their business and go into other areas, but don't do it at the expense of your core business. Focus on your core business first. There's always somebody out there that can do it better. And it just gets frustrating to those of us who want to go ahead, want to use a service, and they advertise as a one-stop package, but let's face it, it isn't. There's other people that do things better. As I said before, stay in your lane.
Yeah, and I think one of the other problems with QuickBooks is that they've purchased so many of these ancillary products from different companies by eating them up that they don't talk to each other anymore. The payroll product does not work seamlessly with their main online product. And one of the problems I've been having is that the desktop payroll doesn't convert over cleanly to the online payroll. So, this is Intuit payroll to Intuit payroll. The two should work. The two should work with their products. So having all of these Frankenstein accounting systems trying to do everything and be everything to everyone, it's just not working. And I think, I really appreciated AJ's rant, but if the folks at Intuit were listening to this, they would just clip out the 10% where AJ is saying what a great product they were, and they'd slap it on the back of a box and sell it. So, this is kind of the marketing masters that they are. But speaking of AJ, hey, you have another article for us?
I do. And so QuickBooks or Intuit is not the only accounting software out there, and it's not the only accounting software that gets the ire of the public. So this is a shout out to our friends in South Africa, who last weekend suffered a major outage of Sage's online-based software. And this comes our way of my broadband, I guess. Anyway, I found this out due to Tax Twitter. So shout out to Tax Twitter for putting this out there. So I guess what happened was this is as of January 22nd, but last week for about 7 days, the Sage 1, which is used by many businesses to generate invoices, statements, process accounts, and do VAT submissions. So VAT is value-added tax for those outside of the U.S. It's a tax charged on service industries and various industries that is levied there. So it's a different tax submission that is handled. But so anyway, I guess it was down for 6 days with no support at all and nobody able to access their accounts. The other portion of this was, I guess Sage decided to upgrade the back-end server portions of their software And of course they chose the best time to do it because the filing deadline was last weekend for all of their VAT taxes. So the SARS's January deadline for businesses to make VAT submissions was coming this Monday, which was this Monday here. And their accounting software, they were unable to generate the reports needed to be able to file those VAT taxes for it. So according to, I guess, to the Sage status page, this occurrence occurred because of an upgrade of the infrastructure aimed at improving process. So unfortunately, they just apologized and basically said that, we can't do anything about it. Update, it's back up and running. But I'd like to get your guys' take. Did you guys even know that, I guess, Sage is, I just thought that maybe QuickBooks was worldwide, but I guess there's a large, portion of the world that uses Sage or different products, I guess, other than QuickBooks.
I actually ran into Sage being down last week and didn't realize this was the reason why, but I wonder if this had anything to do with it. I got to harken back to a point I made on the podcast before, but just, in accounting software and in software in general, one of the huge factors in people buying it is uptime, especially in accounting software, because you're trying to use it to run your business. And so it's super key that it's up, more so than in so many other products. And so I just want to say this is like a fatal flaw for that type of product, a product which, by the way, wasn't doing maybe as great as it could have been in the accounting arena in the first place anyway, because the only people I've ever spoken to Sage about are you guys. So yeah, what else do you guys think about it?
I didn't know if you knew this, Charlie, but a Sage product, there's a current Sage product called Acumatica, which is actually quite fancy, and it is by the same makers as Sage, but I don't know if Acumatica was down last week too. Sage is kind of one of those products that I heard a lot about, a couple decades ago, and it's interesting to see the ebb and flow throughout the world as to which products are used where and when and what's in fashion. And frankly, we only hear about these things when there seems to be catastrophes. I don't even know if Intuit and QuickBooks is used worldwide, or, what the main software for accounting is in China. It'd be interesting for those out there who are seeking to kind of go out on the international stage and practice their accounting in different places around the world, to figure out what local software is popular and what local software is preferred. But I think with those softwares that try to be everything to everyone, you're going to run into the same problems all over the place. And the bigger you get, the harder those outages seem to affect, the harder the fall, I guess.
I appreciate that. I did not actually realize that Acumatica and Sage were the same thing. It was not that product, so they did partially work. Not fully, so let's not get excited, but they did partially work.
Shout out to those accountants listening that remember Peachtree, right, as the step up from QuickBooks. Jack's laughing because he remembers, right? Peachtree was like the manufacturing gold standard for a long time, alternative or step up from QuickBooks back in the day. So, but
or
yeah,
Lotus 123. Let's not us forget.
Let us not forget at one time Peachtree and Lotus 123, right? Not 321. But yeah, so a harken back to a simpler age, when mullets were in. Well, I guess mullets are in now, but yeah.
Now Peachtree and Lotus just sound like yoga poses, right?
Yeah, or a yogurt, flavor, right? Anyway, Jack, you got another article for us?
Yeah, I do. I got one that comes from us from Yahoo Finance, and it's talking about Merck backpedaling out of the COVID vaccination lottery. Guess all the major, all big pharma seem to. I don't know if they were forced into it, coerced into it, but they all got kicking and screaming into the finding a COVID vaccine. And from the sounds of this article, Merck was last to the dance and decided to back out of it and focus more of their R&D on treatments for COVID for the people that have gotten it, and they'll work on the treatment rather than the vaccine, which is kind of interesting. And since I posted this article just this morning, J&J was out talking about their vaccination statistics. And I guess it all depends on who's reporting the story, because when I saw the headline come through on my phone, I thought, man, that's not very good. It talked about J&J being 72% effective worldwide and 66% effective here in the United States. But I read another article later in the day where if you looked at those facts, it talked about, it was very, very effective, I guess, in preventing, severe symptoms from getting worse, making cases mild, keeping people from going to the hospital. But, just kind of the take I had on the whole thing was, we get these headlines, we get these blurbs, we hear about vaccinations. I mean, do you really know what, do you really know the story you're getting is the true story? And I think there's probably a whole heck of a lot more to this because, historically it's taken a lot longer to bring effective vaccinations to market. And this time we're probably working in less than a year time frame. I think, Merck's just probably being realistic. It sounded like if they were the last of the dance and the first one out of the dance, they weren't committed in the first place. But, what's your guys' take on big pharma and COVID vaccinations and treatments?
Well, I'm going to refrain from any Bill Gates or microchip talk here, but no, but I think what really highlighted in the article for me and something that I knew about before is these drug trials, the amount of R&D costs that goes into creating a new drug. I think it's like averages $1 billion for any kind, of R&D costs to even, put something to market. So the fact that I think it really shows like the fact that, two separate manufacturers or drug manufacturers were able to come to market with a COVID vaccine that's more than 60% effective, I think is really remarkable. I think it speaks to the innovation in that field. The other part that's kind of, then the flip side of that is has there been enough human trial and enough vetting of these that it's safe? And it appears that it has, you know what I mean? But I'm worried, I guess I'm more worried for the vulnerable population in this whole thing, stepping away from the business side of it and looking at the human side of it. I'm really concerned about those vulnerable populations, ones with, immune deficiencies or, allergies or people that have underlying conditions. If this, if the shot protects them, then I'm all for it. But a lot of, and my wife being one of them, she has some conditions, underlying conditions that, I'm concerned about her getting the shot just because, I'd like for her to be vaccinated, but at the same time, I don't know of all the ramifications because of the ramp up for this. So I think from a business perspective, it's really admirable that these companies were able to step up and deliver a vaccine that appears to be working and appears to be safe. But at the same time, I guess trepidation sets in, and I can understand people's kind of leeriness about, the lack of, I guess the minimal amount of human trials that went into this and the quick turnaround on something that's going into your body.
Yeah, I think admirable. I don't know that I'd go so far as to say it's admirable of the companies, but I do think it's really interesting and great that the government stepped in and agreed to fund these without knowing their efficacy. I think that's what governments should exist for, to help mass populations in time of need. And I think throwing, $1 billion this way and that way at Pfizer and at whatever the other one is, Moderna, to kind of get these vaccines up and running before they even knew what their efficacy was a good idea, because that gets us to the place where we are now, where we have something to give to people that is considered relatively safe. I think Merck probably got some cash too from the US government, and not all the bets are going to work out. But now they're shifting their focus towards treatment of those who already have COVID. I think that's perfectly fine. I don't know about Johnson & Johnson, but I think having a system where we can attack things early on, and, kudos to those in the science industry under the Trump administration who pushed on the warp speed thing, because we could still be sitting here with companies trying to self-fund vaccines at this point and no closer to any sort of vaccine program, and we could be at this for another year or two. I mean, I think that's part of what the benefit is of having a government that's fairly wealthy with money to be able to solve some of the societal problems. My last comment would be, Merck is not my favorite name because it sounds like somebody saying my name, but they have a nasal congestion. Anyone else?
And I'll never view them the same way again after this. But I would say that nobody is late to the COVID vaccination party. I mean, until everyone is vaccinated and we have that functioning to a level that is to where this is a thing of the past, then okay, people can be late to the party. But I think at this point, anything that we can do to be getting more vaccines to more people is going to be a win. And so, yeah, I just found that element interesting. But I do think having a focus on healthcare and treatment is also a really valid strategy because, we're going to need obviously plenty of that. And like you said, with the efficacy, I mean, you don't really know what the reaction is to all of these different things until it's been in the population for some period of time. And I'm not anti-vax or anything like that, but I'm just acknowledging that like new technologies and medicines take time to figure out. And so I kind of took a little bit of solace in the idea of having multiple alternatives available and getting a chance to kind of see how those all played out before really, investing in one so. All right, AJ, do you have another article we can talk about?
All right, Charlie. Actually, we're going to do a little something different here. This isn't we had numerous articles submitted for this one, so I think we'll just open it up for discussion. But let me run through the GameStop stock boom that happened, and that's been everywhere this week. And we wouldn't be a podcast or a clickbait channel if we didn't go over it. So let's jump into it. So GameStop, we've talked about GameStop on the podcast before, where they're shifting from brick and mortar. They kind of had a new board of directors back in 2020. The Chewy founders invested in GameStop, got 10% of the stock, really moving the board, got 3 seats on the board, and really started moving from brick and mortar to an online presence. Like, mind blowing that you're a game company that offers digital sales instead of brick and mortar locations. But so anyway, this kind of restructuring was being done of the GameStop, and GameStop was failing for a while, right? The brick and mortar where you took your Xbox 360 in and got 2 jawbreakers and a floppy disk for your return of your game system 10 years ago kind of flipped on its head, where everybody's buying from Amazon or digital downloads or whatever. So GameStop really needed to make a pivot, and they started to. We talked about on this podcast before about how they had teamed up with Microsoft and Xbox to offer sales, and they would get a portion of those sales kicked back to them for offering those either digitally or in store. Fast forward now to stock price, probably in December was right around $4. And there was a lot of speculative shorting, which means Wall Street was betting and venture capital firms were betting on GameStop to tank. And they went to market with this, and they basically went around saying that they thought this was an awful stock, because they were holding short positions on this. They were hoping for that stock to fail. And if you don't know what a short position is, you're betting on the fact that the stock is going to fail. To do that, you basically take a loan on shares that you think are going to go down, and you're betting against them. So you got juice rolling on it. You have interest paying on this to hold your position. So what happened was there was a Reddit group, Wall Street Bets, that essentially figured this out, that figured out that VC firms were over leveraged on the short side of this stock. So they laid out a case to be bullish on this stock, and people started buying. Now, this wasn't a valuation thing. This wasn't based on economics. This was based on just them being bullish and pumping money into this stock. What happened was it went from about $4 a share up to, like, I think now it was up to a high of like $380 a share or something like this. So you're talking about an astronomical boom. The other thing is that these short sellers had to keep putting more money down of interest. So you're talking about these VC funds. There was actually a VC fund that needed about $3 billion in cash infusion just to cover the interest they had on these shorts. So essentially, you have all these VC funds losing their minds over the fact that this Reddit group, these individual kind of day trader, internet traders, were able to do this. and Robinhood and all these other online platforms being used to essentially day trade and buy into this, screw the big VC kind of thing based on an internet post. So anyway, there's been a lot that unfolded, and I think, the panel has some opinions and some different stories, I guess, from this, but I kind of wanted to lay out the timeline of what happened and where we're at now. And now it's basically a media story of how, essentially Reddit has gamified this short selling and really screwed over the large institutional investors on this. And the small guy has kind of done this David versus Goliath is the way it's been presented. But I'd like to get your guys' take on it and kind of have an open-ended discussion of the A, economics and business sense around this, and then B, kind of like how you guys feel about this, or if you have anything to add, I'd love to hear.
I just think it's really important to kind of note the idea that when you short a stock, you're opening yourself up to theoretically unlimited loss because you're selling something you don't have and you don't know what it's going to do before you're forced to then buy to cover. And so we always look at these institutional investors as like who we go to know what to do and to utilize their financial knowledge on how we should invest. And here we're kind of, this event, while an anomaly, is kind of a violation of a pretty basic principle if you think about it, because it's basically them setting themselves up with an unlimited loss potential kind of investment and then giving just no thought as to what could happen to it after investing. And so, I think it's a historic event and really interesting. What do you think, Mark?
I really like this story because it kind of shows that a group of people banded together, and again, bringing in technology, can help shake up a system that's been in place for a long time. And as I was reading some of the articles on this, well, first of all, I want to point out the irony, non-irony, that one of the biggest platforms that this has been used to do this is called Robinhood. Now, it doesn't escape me that what Robinhood in fiction represents. This is somebody going after and trying to take down the wealthy to help out the people. And this is a platform that currently, and there are others like it, that doesn't charge for the actual trading of stocks. So as a result, all of these people, it democratizes using the stock market, and all these people could get in for very low cost and buy portions of shares instead of buying full shares. And a lot of people banded together could actually drive up a price enough to cause hedge funds real worry and real strain. And then we see these hedge fund managers go on CNBC, these hedge fund managers who want to be left alone because the system completely works in their favor, all of a sudden screaming for regulation, probably knocking on Elizabeth Warren's door saying, please help me, Elizabeth. All of these people, I mean, when you look at some of the people who are invested in this, who are part of this group of Wall Street bets, some of these young kids, they are not interested in investing in the stock market, but some of them have had houses taken away or watched their families go into bankruptcy because of the 2008 market crash that was largely driven by speculative mortgage financing and by hedge funds who basically screwed people over. So at this point, they're saying, well, now's our revenge time. We have the technology, we have the ability to band together. And for the hedge funds to say, it's not legal for all these people to get together and drive up the price. This is what mutual funds have done. This is what large institutional investors have done all the time. When you're investing, one of the phrases is you follow in the footsteps of the elephant. You see what these large investors are doing, and then you just try to invest fast enough to help get you on the upswing. So having the democratization of some of these movements helps us really see what some of the flaws in the market can be. I mean, the market really is just the people. And if the people are no longer large institutional investors or hedge funds with billions behind them, and it really does become the people, then it's much more difficult to be able to predict a stock's movement based on fundamentals. So, I mean, some of the other pieces that are coming behind this, they're starting to do this with AMC and some other companies as well that are very low stock prices, and they're starting to drive the prices up there as well. And hedge fund managers are losing their minds. So anyway, I'll get off my soapbox, but I think it's just fascinating to watch.
One thing I think that was really interesting about the whole thing was the free market or capitalism basically pulled the biggest transfer of wealth that's bigger than any socialist country has ever seen. You're talking about a group of Redditors that were able to strip the wealth out of a really wealthy, investor class and distribute it to, essentially the average Joe Reddit user in the matter of a few months that, anybody around the world would be envious of for this redistribution of wealth. And I think it's kind of amazing, to be honest, with the free flow of information and the ability to be able to invest with the click of a button on your smartphone, the power that you have, that the average person has right now, or a collective group of small people to be able to move the needle on this and a transfer of wealth, I think is just kind of mind blowing, to be honest.
I'm with you, and I agree 100%, but I have to kind of play devil's advocate here for a second and say, do we actually have the power? Because what did the hedge funds do immediately when this started happening? They cried, not
those ranks.
It was no fair, right? This is not how this is supposed to work. I'm supposed to get all the money, not give any of it. And so what do? They go call Robinhood, right? Who's, by the way, you used a great word, Mark. I'm going to use it again. Democratizing finance for all is the Robinhood slogan for why you should use their service. And so when the big hedge funds went and cried, foul play, Robinhood just said, all right, you win. Even though we have that as our slogan, and even though we're built on the idea of Robinhood, we're going to go ahead and shut it down so that people, basically so that you won't continue losing money. And we're going to lock people out of the app so that they can't continue doing this. And we're going to make it so that only certain types of trades, the ones that we approved and are being paid for somehow on the side, are the ones we're going to go ahead and let through. And so what happens is that a lawyer went ahead and started a class action lawsuit and set up a claim basically against them for not performing their service correctly. And there's an article kind of talking about what some of the challenges of that lawsuit will be. Like there's a user agreement that sets up arbitration and whatnot. But at the same time, you have, senators and whatnot voicing their approval of it and willing to kind of back a movement to see that justice is kind of served here. And so I think it's a really historic event, really interesting. And like you said, it's an example of Reddit giving it to the man.
Charlie, it's funny. That's when I look at this article and I love it, and I love aspects of it on one hand, and I hate aspects of it on the other hand. It's like the old joke: what's the difference between a skunk and a lawyer? Dead in the road. There's skid marks before the skunk. Who feels sorry for a hedge fund manager and all these rich people playing these hedge funds? But that's I think I made the analogy earlier when we were talking about this a little bit in prelim that. It's like the card counter in Vegas. Somebody figures out a way to beat the system, and all of a sudden, boy, the house is horrified. Wait a minute, this isn't supposed to happen. We're only supposed to take money. We're not supposed to pay it back out. And that's the part of the story I think is great, that these people banded together, figured out a way to beat these hedge funds, and it's amazing, like you said, how fast in a day, 2 days tops. Government, all these influential people closed ranks on these people that had, the ingenuity to figure out a way to beat the game. And the House didn't like it at that point. It harkens back to, I know David Einhorn is a famous hedge fund manager for years. And his shtick used to be, he'd come out with a stock against the stock. He'd have people in the media. He'd plant stories. He'd make he had a methodology for driving down that stock price, and they put a stop to him because basically it was wrong. This same token here, it's these people were doing what was perfectly legal at the time. These hedge funds don't like it. Too bad. But so on the one hand, I think it's just hysterical that David found a way to beat Goliath. But on the other hand, it's really disheartening that, to watch how these people in high places have support that that retail investor never has. If they lose money, you got the force of the universe coming in and step in within a day and make things right for them, and it's just not right.
Yeah, I just think it's bizarre, though, that you can have Jim Cramer on CNBC recommending for people to buy stocks every single night. And if people do it and the stock price goes up and Jim Cramer makes some money off of it and all these followers make money off of it, that's just peachy keen. But if people do it of their own volition on Reddit, then all of a sudden it's a problem because it's affecting the hedge fund and because there are more people paying attention. Probably the most bizarre thing to come out of this whole thing is to see Ted Cruz and Alexandria Ocasio-Cortez on the same side of an argument. I mean, I'm not even going to say strange bedfellows because that's just a disturbing image. But it's really weird that, we've got people who are really interested in the democratization of the market and the hedge fund being so powerful that it's able to stop Robinhood from acting within its tracks, and who knows what leverage they pulled. But I think this kind of thing, as technology gets more and more advanced, we're going to see this more and more. And I think the markets, probably rightly so, will see a correction based on true capitalism at work, with people having the ability to really spend money and to invest in things they believe in. I mean, we could get deep into the discussion of whether shorting is even a valuable tool. I mean, betting against a company, it kind of defies what I think the stock market is there for. And, I understand that it has its place to kind of shine light on companies that might be failing. But if your entire business model is betting against a company, maybe you need to check yourself.
I think we've talked about on this podcast before, like the overvaluation of like Peloton or WeWork and these valuation techniques that created these huge IPO, stock prices based on nothing but, essentially the bank that lent, or the investment company that lent money or had money into a company. And then of course did the valuation for how much the IPO would be worth, and is telling them there's all kinds of growth when there's really no, bottom line to speak of. Everything's being, they're operating at a loss, and how these companies can be overvaluated like this, and how everybody kind of lost their mind. I think this really shines a light on the fact that, like, currently stock prices are probably more of a reflection of how people feel or where the money is, as opposed to like the value of the stock being based on the underlying company. And I think it really shines a light as to the gamification and the casino-like atmosphere of Wall Street and public companies, as opposed to really a nuts and bolts accounting or business valuation of what a company's worth based on what they're selling. And I think if anything that comes from this, besides the redistribution of this wealth and seeing hedge fund managers cry on TV of foul that there needs to be regulation now. And I find it hilarious when they've been doing this for years, like Jack had pointed out, that they've been, shorting stocks and then, essentially going on the media and telling everybody how horrible these stocks are because, but then not disclosing that they're holding a short position on it. I think stock price anymore is based on public opinion and how much money is put behind it, as opposed to like an undervalue or a true valuation of what a company's worth and how they're doing. I think this really shines a light on it.
And I think it's important to kind of think about the differences between what the function of the stock market is versus the derivative market, because there was a quote I heard once in a class where they were talking about what is the difference between why is the stock market not gambling? Like, what is the key difference between gambling and the stock market? And at least in this class, this professor's opinion on it was that because in gambling, there's always a winner and there's always a loser. But in the stock market, it's possible that both parties are going to benefit from having worked together. And so, like Mark was saying with the with shorting stocks, I think that we're back to kind of a more gambling type scenario, in which I can't really see a scenario in which, when you short a stock, there's a winner, there's a loser, and that's it. There's not any mutual benefit to that activity. And so I just feel like that's a key distinction between why the stock market has a reason to exist versus why derivatives are maybe not the same as in, traditional stocks.
Well, and I might mention, like, I think derivatives serve a purpose as a hedge, right? And I mean, as a variable interest hedge, not used in the way that caused the great financial collapse. And I want to note to our listeners and just put this out here. We're not financial advisors. We're not advising anything on financial positions. I'm not aware of any of us personally have holdings in any of this stuff, and none of this should be construed as investment advice. That was the letter that I got from our lawyer right now. But essentially, I think, you can, there was a large to-do about derivatives, but they kind of do serve a purpose for a variable interest hedge here. But when they're used in a speculatory manner, that's when it causes problems, and there's over capital influx in that market. And I think the same thing can be said about shorts. Shorts hold a market position that's buyable, but when they're used to, kind of bet on red or black, like a casino style, just like derivatives were, where there's no underlying value to what you're placing your bet on, that's when you get in trouble. And I think that's what I think we're seeing that play out.
Yeah, I'll add to that. Yeah, because I made a blanket statement that we shouldn't be betting on stocks going down, and I think there's a place for that. But I think at one point in this, when the money started to go up in this particular case, there was 71 million shares shorted for GameStop, and there were only 69 million shares in existence. And that's when these folks decided, okay, this is ripe for a short squeeze, because this is just the market making a huge gamble that this stock is going to tank, and effectively these hedge funds trying to drive this company out of business. Now, if you think a stock is overvalued and you want to short it, sure, there's purpose and there's reason behind that. But when it becomes so overinflated that you are actively seeking to drive a company out of business, which in my opinion, it looks like they were trying to do. Again, I'm not an investment expert, but for the hedge funds to now have somebody who can counter this, because there's no government regulation stopping them from doing it, I think it's an interesting check, and it'll be interesting to see how hedge funds can act in the future should this kind of behavior continue.
I just want to be clear. It's not that I don't think they have a purpose. It's just that I think there's a defined winner and a defined loser. And if you're on the winning side of that, it has a perfect purpose for you. And so it's possible to be winning there. I just think it's not possible for both parties, the company and the person shorting it, to be winners. And I think that's where it kind of falls apart. Yeah. The other interesting thing that came out of this was that the Robinhood co-founder came out and made a statement that I thought was a little bit funny. He said, in trying to justify his decision to go ahead and lock everybody out of the app, he said, I know how Clorox and Windex felt at the start of the pandemic. They were running out of hand sanitizer and supplies. And it's just hilarious to me because it's like something totally unrelated that is not the same thing. And then we're just kind of trying to align ourselves with something that's clean and seen as a safety and a public health purpose. But the reality is that you can't, equate locking people out of shutting down a hedge fund to a company struggling to make PPE equipment because of a global pandemic. So
pretty sure there's no skid marks in front of a hedge manager in the road either, just like a lawyer. The skunk maybe, the hedge manager and the lawyer, no.
I bet you that Robinhood board meeting wasn't full of merry men.
No, I bet it was not.
I just like to say Jack's comments on lawyers are not the position of TCA or ourselves. We love our lawyers that give us referrals. So,
and that we work for directly.
Yeah.
And no comment on the skid marks either.
Yeah.
People who trade derivatives are awesome too.
Yeah.
All right, everybody. That's been our show, the None of Our Business' YouTube show and podcast. Thanks for tuning in, and check back again next week for more business updates from an accountant's perspective. Thank you, everybody.
See ya.
Merck out.